Hey guys, Nicole here with Momentum Accounting. In this video, I'm going to be talking about accrual versus cash basis accounting and why accrual matters. So I usually recommend that businesses that are approaching or are at $1 million in revenue switch from cash basis to accrual basis accounting. And the reason why is because your business has become more complex, right? You have employees, you have vendors, you have contractors, you're adding on health insurance and 401k, you're trying out new service lines, you're trying out different pricing models. And accrual-based accounting is the foundation for creating what are called KPIs, and KPIs stands for Key Performance Indicators. So these are the metrics, this is the gauge of your business that helps you understand whether it's on track or off track. It helps you answer the big questions like, can I afford to hire a new employee? Is my pricing correct? So without being on accrual-based accounting, we can't see trends and we can't measure these KPIs. And so I'm going to jump over here in a second and just show you an example so you can see it visually of what a business looks like on accrual. It's the same business, but the data we can actually analyze by being on accrual basis. So how do you get on accrual basis? Well, typically you need someone doing the accounting that has an accounting background, so has a degree in accounting, is either a CPA or has trained under a CPA. They don't have to be a CPA. There's lots of great accountants out there that don't have their CPA license, so don't get stuck on that. But in an organization, this person would be called a controller or accounting manager, someone that is managing the financial process beyond the bookkeeper. So let me jump over here to the example and I'll show you what I mean. Okay, so here's a quick example. A case study of a client we worked with. They came to us and they were having challenges really understanding their financial statements. And so their target net profit margin, they said, based on their industry standards, so this is a marketing agency, their target net profit margin is 25%, but they had no idea if they were actually reaching the 25% net profit margin month over month, and they didn't really understand what action they could take to adjust if things are off or what levers they could pull. So as you can see, this is their net profit margin trend on a cash basis. You can see some months it's negative, some months it's 98%. And so the challenge with this is, how can you make decisions if you don't know what's happening in your business? And so we went back and we redid the financial statements on accrual basis, and this is what their net profit margin looked like after we did accrual basis. So you can see, like, earlier in the year, they had a really expensive employee who didn't work out, so they ended up letting that person go, and it increased their profit margin. And so they didn't really know. They had a gut feeling this person was too expensive, but they weren't really sure. And so we probably could have told them a lot earlier that the margin that they were making on that additional service line that they were building out didn't make sense, and help them act sooner. So anyway, this is a good, really, really good visualization of why accrual basis matters. So if you want the full definition of accrual-based accounting and what it means, I recommend going to ChatGPT, because ChatGPT will probably explain it better than I can. But yeah, feel free to reach out if you have any questions. You can reach out to us at momentumaccounting.com.